Are you looking to get a funded trading account? I know nowadays there are a lot of options for you. But here at Trader Funding Program, we do things a little bit differently. Plus, we're run by a group of traders that have decades of experience on trading desks and trading floors from around the globe. And we have a simple set of guidelines for you to follow with no hidden rules. And plus, we give you tools to help you become successful, like using ForexAnalytix, like being in a community of traders where you get to talk to people like me and other ForexAnalytix analysts all throughout the day. If you take an assessment during the month of July 2024, you're going to get a one-on-one consultation with me, Blake Morrow, President of ForexAnalytix. So join us today. I look forward to speaking with you soon.
Good morning, everybody. Welcome to the Flow Show. Oof, what a busy one it is. I've only been at my desk hour and a half. It feels like I've done a week's work. Lots going on, lots of volatility going on at the moment in some pairs, not others. So we'll get through that in a moment. First of all, just want to bring you your attention to this offer that we've still got going on for our trader funding program. There, you've got just under a week left of seeing Blake's mugshot before that July offer finishes. So if you want to take a TFP, don't dilly-dally, get in now, take advantage of that offer, a free 45-minute session with Mr. Morrow himself. Right, let's get stuck into it, get through some of these headlines. Lots going on in China, lots going on in the yuan in particular. Where do we start with this one? As you can see, we've had a bit of a crap out in the yuan, much as we're seeing a bit of a crap out in the yen as well. So various things happening. Firstly, the fix is left roughly unchanged in the 713s. Nothing changed there. Now, what happened in the early part of Asia is, or the early part this morning, Chinese banks started cutting deposit rates. Then we got the PBOC popping up with an MLF operation, and they did that at a 20 pip discount on the rate at 2.3% versus 2.5%. So effectively a 20 pip rate cut. Now this MLF rate they left unchanged in their official announcements a week or so ago. So this has been a bit of a surprise rate cut. And 20 pips as well, whereas all the other rate cuts we had last week were 10 pips. Now it's all a bit complex and I don't understand half of it in its entirety, but they are changing what they're doing with rates, and there's a lot of stuff going on with the bond market that we've spoken about previously. They are potentially looking to do a form of QE in the bond market where they will borrow off of bonds off of holders and sell them into the market. They're calling it a liquidity thing. So they want to, they're worried about the bond market seizing up, so they want to make sure they provide plenty of liquidity. So they're doing things like lowering collateral rates, how much people have to hold, and there's a lot of stuff going on under the hood that, as I say, not a lot of people understand what's going on. But if you take it just as face value, it's a rate cut. Surprise rate cut, and we've seen the yuan strengthening. That goes against the rule of thumb with rate cuts, that it usually sees a currency weakening. So there's two trains of thought here. A, this move and what they're doing in bond markets is encouraging flows back into China that have been pretty much seeping out for pretty much all the year. As you can see, for 2024, we've seen the yuan weakening. We knew that there was outflows of stock markets when the data was looking dodgy and whatever. So we could be seeing some inflows. Some of those inflows could be coming from this meeting between US executives. There's a board, a US-China business board, if you like. So a lot of these executives went out to China. They've had meetings. There was a lot of platitudes, no real super nut stuff. But if all those US execs have been heartened by what China have to say, it could be causing some inflows as well. They finish their meetings, they go back home or jump on the phone and say, yeah, let's get back into China. So we'll know that's happened because in a 2 weeks' time or a couple of weeks' time, we'll probably get a load of banknotes saying now's the time to buy China. Obviously, 2 weeks after they've all got in, of course. So that's just something tongue-in-cheek to keep an eye on. Overall, we've seen a big drop in the yuan. A lot of this might be coming on the back of these yen moves as well. We've seen yen pairs crapping out once again today, but I'll look at those in more detail later. So there's that been going on, that meeting, and some of the details from that meeting. China told this US mob that higher tariffs on imports from China will harm their businesses inside the country. So that was a bit of a warning. But then China said they would pledge to improve the business environment for foreign investors. So anyway, that's one piece of the puzzle. This rate stuff is another piece of the puzzle, and what they're doing with in their bond markets, and then obviously what's going on in the yen and everything else to boot. But it's a bit of a surprise move, to say the least. I got tipped out the balance of my longs in this move at 723. Did manage to get some profits out of it, but gave a bit back on that stock move. I was half tempted to catch the knife in this one, but I'm just a little bit cautious at the moment because there's some very volatile moves going on, and a lot of it I don't understand. And if I don't understand it, I ain't going to trade it until I do understand it. Anyway, moving on to Japan. Yesterday, it was announced in NHK News that the national minimum wage has been hiked to 1,054 yen per hour on average, which is the largest increase ever. We knew something along those lines was happening, but now apparently been confirmed. So that's good news on the wages front, adding to what we've already seen for the start of this fiscal year. The metric is going to be what happens in the next fiscal year, and we won't know about that until later on the end of this year, as we go into the new year, when they start to pop up with all the wage negotiations again. We've had some data out of Japan as well, PPI data, which is called Corporate Services Price Index. That rose higher than expected to 3%. Versus 2.6 expected and 2.7 prior, which was a higher revision. So a bit more price pressure coming in, which will be good for the BOJ into next week's meeting. Again, maybe a bit behind some of these moves in the yen as well. I think pointing towards them maybe doing something next week. We had some department store sales numbers out from those guys as well. I don't think it's on the calendar here, is it? Nope. Don't know why, but it's not. Let me just double check. Nope. So nationwide department store sales year on year were up 16% versus 14.4% previously. So another little boost there for the consumer. Coming over to the Bank of England. And Reuters poll has the majority of economists expecting them to cut at the August meeting and then once more this year. 49 out of 60 in this poll taken between 18th of July and the 24th said they would cut to 5% at the meeting. That's just over 80%. However, that's down from the 97% who were predicting the same back in June. So those expectations have dropped. Pricing for the August meeting is roughly around 45% chance. So on the lesser side of expectations, I think it's going to be a bit of a coin toss what happens at the August meeting. If you look at inflation, there's nothing changed since the June meeting. They shouldn't cut, but they might be looking at some of the other metrics as well, and you just never know with those clowns first and foremost. Things still looking excellent in Germany. We've seen another negative IFO that came in this morning, down pretty much, down on all expectations, down on last month as well. All those numbers coming in red. So Germany still in a hole and not looking like it's going to climb out of it anytime soon either. Just going back to some of the data from yesterday, and also we'll look at the BSC PBOC, obviously. We had some housing data out from the US. New home sales, they came a little bit softer, 617K, down from expectations, down on last month. Not a huge miss, but still a -1 in the pot. Median prices dropped 10,000 to 417,300,000, or 417.3K, however you want to call it. So minor drop in sale prices there. We had some trade balance data as well. Goods trade balance, the deficit improving a touch on that. We had the S&P manufacturing PMI as well, which following a bit of a similar pattern that we've seen elsewhere. Manufacturing moved back into its contraction, was expected to jump. So that was quite a significant drop back into contraction. However, services went up to 56. That was expected to go down. Shows you what these lot are like with their expectations. They've been getting it wrong pretty much every month, every country. So again, services doing okay, manufacturing still in the doldrums. So that's again not exactly will put a bid under commodities anytime soon. Over to the BOC, they cut 25 pips as expected. In the statement, said further cuts are likely if inflation keeps easing. Monetary policy is still restrictive, and we don't want to weaken the economy too much, causing inflation to fall below the 2% target. So again, another hint that they may be restrictive, but they are bit worried about that restrictiveness having too much of an effect on the economy. The key point that I was waiting for, and to be honest, I ended up switching off Macklem after a bit because he was just boring me to tears. They talked about this divergence with the Fed. Macklem said that the divergence from the Fed is not likely to be serious. He said on the limits of divergence, they're still not close. So they've still got room to cut as far as that's concerned. They're not near their limits between what happens with the Fed. It did waffle that it was expected that the Fed were going to cut rates at some point. So who knows, maybe he's had a little heads up from the man himself, Mr. Powell. You never know with these lot always talking together. Right, not a lot of other headlines out. We did have some earnings bits and pieces, all pretty much by the by. So what's going on in markets? As I said, there's some things I do understand. There's some things I don't understand. It's all just getting a little bit stormy, shall we say. And I don't like it when things get stormy. We've been sitting in pretty calm markets of late. So when you get these big bouts of volatility, it does raise my caution levels. I start wanting to sit on my hands more than do anything else. So I've been tipped out my dollar China longs. My Aussie dollar got tipped out as well. I was long against this support here down at the 50 fib. That's been busted out as well. Dollar CAD, I'm still in that one. Have I been filled on my next bit? No, not yet. I've got an offer in at 40s. I'm just waiting to see if that gets done as well. Where are we? Just checking. No, 38 highs so far. So after the BOC, what this one did was quite interesting. It dipped back down to the break point and held it. And so now we've seen it move back up through 138, and we might be motoring on towards this prior high here up at 138.45, 46, whatever you want to call it. So I'm still happy to play this one. It's going a little bit slower than everything else. So I'm happy to play this one from the short side. If this one gets busted though, on the back of everything else that's going on, then I'm really going to be looking to sit on my hands on this one. So the reason I get more cautious is when we're seeing markets that have good ranges, good levels, and they just start getting carved through. Dollar MEX is one. I had a little tap up here at 1850, big level. Said I wanted to trade it. I had a little look. I decided to trade it. Kept it tight. traded it off short 1850, stop at 1853, and that got taken out pretty quickly. We did get a little pullback down to the 45, 44 area after that, of course, but no, we're back above now. So, you know, these, when you start getting these big levels breaking, something is definitely going on, and you know, you don't need to be a blind man to see that. Dollar yen been banging on about the 152 level for, well, ever since we were below it, let alone above it. And we've come down, and we've come to a low of 151.94. So we tried to have little tickler stops underneath there, but by and large it's held. We've seen a bit of a bounce, which might be a bit of a dead cat bounce, but this was a big old level down here. So I've had getting a little long off of that. I got half away in the bounce already, chipped a bit more off up into the 50s, 60s. So we'll see what happens next. It's coming back down pretty quickly. Again, when you're trading off the techs, you've got to be very light, because we're just carving through level after level after level after level. Okay, stuff that you might think normally would hold, it's just going in a blink. These sort of markets, these sort of flows, as I keep saying, they don't give two monkeys about lines on a chart. Okay, so, but if you're going to pick your entries, pick your places where you want to catch knives or whatever, try and do it where these levels are the strongest. And this one is pretty strong, but we're coming back down now. If we get all the way back down there, then perhaps, and probably likely, we're going to be breaking that and on our way down for another leg lower. So be very careful if you're trying to catch that knife. If you're trying to catch these dips because you think it's going to bounce, you know, if you're not being successful, you know, maybe have 2 or 3 goes, you lose 20, 30 pips a pop. You've got to remember, you've got to get a big bounce to get all that back just to break even. So, you know, keep things small, keep things very tight, because each time you lose, you've got to make that back on the next one or at the end of it. So be very careful catching off. At some point it will bounce, but you want to wait for a decent bit of price action to show you it's going to bounce. So if we get another hold down here, then maybe a move up, 153s, 154s, maybe another move back down to here. If it holds again after a bit of time, then it's building something more solid. Just give me one moment, please, folks. Sorry about that. Just had to switch a phone off. Right, so yeah, dollar yen. If we do keep going, I mean the downside, you can take your pick where we're going from here. Next stop was probably around the 150 big figure. We got another bit of traffic in here, 150 70s, that sort of area, 150 80s, 51s. Again, it's just a bit of a traffic area. These were the points that we had on the way up. So they may have an effect on the way down. As for where resistance comes in at the moment, but again, we're doing this break and hold thing. So we had a first low 153 17s. We've had a bounce, can't even get up to the 153. So we're finding that we're getting this sort of resistance pattern happening. It keeps happening at these points. We get a low break, can't quite get there. We've had that all the way through these areas. So just, you know, you can't really hang on to resistance levels really, because they just keep coming down and down and down. So for me, 153 is probably the main level here. We've got obviously this little high here, 52.70s. So if you're looking to get in shorts, these are the little levels you might want to look at. But again, you need to keep things tight, because it's not, if it decides to bounce, we could be back at 154, 154.50 in a blink. So keep it small, particularly in this volatility. Keep your trades manageable. My friend Himashu's asked about sterling relative weakness to the euro. So yeah, we're seeing a bit of a bounce here. This is probably more a speed thing than anything else, Himashu, where cable tends to move more. When you're getting a broad dollar move, cable tends to move more than euro dollar. So euro dollar's staying a bit more stable, cable's moving a little bit more. That's possibly why we're seeing this just move up in euro sterling, just the difference in that volatility. Because if you take the German numbers to heart, there's no reason why the euro should be gaining at all. But again, we're getting a lot of moves via the crosses as well. You know, euro's quite well bid if you take it against some of the crosses. You know, take Euro Aussie, you know, that's just continuing to break higher and higher and higher. It's a similar theme in a lot of crosses. Euro CAD as well, that's moving up. So again, it's just the speed and other pairs. The majors really aren't doing anything. So, you know, we've seen what, 500-600 pips in dollar yen. We've seen 300-400 pips in dollar China. And, you know, the last 2 days we've had, you know, what, 30-40 pip ranges in euro dollar. Even cable, which can swing around a bit, last couple of days still staying pretty tight, you know, 50, 60, 70 pip ranges. So these majors aren't doing an awful lot. Everything else is, though. Euro yen, that's following the yen down, as I've just shown with the crosses. You know, Euro Oz, Euro CAD, they're all moving higher. So you've got a lot of pushing and pulling from different sides. Weak euro here, strong euro somewhere else, which is all likely due to what's going on in the yen. So right now it's a big old washing machine going on. And euro sterling is just caught in the middle. You know, fundamentally, what's happening? Nothing. We're still in a very tight range between, you know, 83.80s, 84.40s, call it, maybe even a tighter range than that. So yeah, it's moving on the day, but it's not going anywhere fast. Again, if you look at the crosses, Aussie yens, Aussie Kiwis looking a bit weaker, but not massively weaker compared to what the Aussie's doing. But this, again, this is a speed thing. This is Aussie dollar going faster than Kiwi dollar. So that's why you're seeing this move here. So that's why it's always important to, when you're looking at any pair, just have a look around the various crosses, just so you get an idea of what is really driving. A lot of this is nothing to do with the US dollar. Okay, this is to do with everything else. As mentioned, dollar MEX, you know, that's getting a knock on from the carry trade. This isn't Trump anymore. Trump was a 5-minute thing. It may be something in a month's time, or if he utters a comment about Mexico, maybe, but this is not Trump trade now. This is unwind trade. We're getting a cascade in the yen, and the yen is the funding currency for pretty much all of these carry trades. Okay, people borrow cheaply in Japan, stick it in something that's got decent rates. That's the carry trade. So if the carry trade, if the original currency that everyone's borrowing is starting to move, then that's obviously putting pressure, and then you get a knock-on effect. It's a bit like dominoes. But it's also spreading to risk. We're seeing oil coming off today as well. There was a pretty strange headline out, and that was that the Saudis are having to borrow some more off of Kuwait to plug some shortages. So you've got one of the biggest oil-producing countries needing to borrow oil off someone else. So these very strange headlines going on. But otherwise, you know, generally oil still looking pretty weak. But that in itself, it's sitting still in some fairly sideways ranges going on here. So it's not breaking any new ground. Looking at some of the other commodities, copper, that's still going. Still seeing fresh lows there. So that's going to have an impact on things like Aussie dollar and other producers. Gold, I know Teresh is watching, so we'll go straight into gold. We're back under the 24 handle. Looked like it was going to have a little mooch up towards the 24.50, but it's crapped out and gone the other way. So now we're down at the 23.60s, which is a level that's had a lot of action over the last few months. So it's already stage one little bounce off of there. And it's holding it, or a couple of little bounces. It's holding it, but the bounces are looking a bit weak up to this sort of more minor 23.80. So a bit of a battleground here, 23.80, 23.60, 65. But what it has done, it's put in a lower high. We've now seen a lower low, so we're starting to maybe see a bit of a short-term trend going the other way. It's always your marker. Can't get back up to some of these highs. Always a signal that maybe we're heading lower, and then quick bust through all the support that held it up the other day, and here we are much lower. So is it going to hold here, or is it going to keep going? Who knows? But if it does keep going, then 23.30 is next on the cards for me. May get a bit around this 23.50 area as well, but we've had plenty of action around here, and then maybe we're looking at the 2300, 2390s, all these little bits and bobs down here. If we crack through that, then we might be on for a bigger unwind. But until then, it's holding the levels it needs to hold for support. Got to get back above these and 24 and turn around this this high to get a move back towards those highs there. The base 23.50, yeah, that's it, right in the just in the middle there. So we've had those series of lows back in the early part of July around there. So yeah, worth keeping an eye on. I haven't got a line in there, but it's clear to see. Now the usual suspects are jumping, or well, they have been jumping all over the curve inversion and its recessionary signals. One of our roomies last night put a comment in the room from someone at some financial institution saying that the curve inversion signal isn't working. It should be meaning there's a recession coming, but it's not. I'm never one to believe in those. People like to put up a chart where every time the yield curve's inverted, there's been a recession after. But it's a lazy argument, in my opinion. Recession doesn't happen overnight. You don't wake up one morning and one minute you've got plus growth, and the next minute you're in a recession. Okay, so you always know when an economy is weakening, and if the economy weakens, it always raises the risk of recession. If the economy weakens, then people assume rate cuts are coming, so they adjust rates and they adjust yields and they adjust curves. It's a natural function of a weakening economy. So the fact that a curve inverts is because everyone's potentially expecting rate cuts to come, and the data's already heading south anyway. So a recession happening is just a natural cause if it happens to go that way. But your yields and your curves have already moved in advance of that in expectation of rate cuts. So it's not a signal, it's a reaction function. But as I say, it's a lazy thing people like to pull up. A bit like seasonals. I put those in the basket of this is a load of old bollocks. Seasonals don't tell you shit about what a market may do over the next month ahead. And I might prove that point now and again on Twitter. But anyway, I won't get it stuck into that. Derez saying maybe an intervention going on from the BOJ talking about the yen. Well, this is something that's at the back of my mind. Not that they're coming in and hitting it with a big stick, but it's almost like walking past someone standing on the edge of a swimming pool, just giving them a little nudge in the back. That could be something that they're doing. They're just giving things a little nudge here and there, and that gets the market doing the job for them, because everyone comes in and sees a bit of support, so everyone jumps in, starts buying longs or starts getting long a bit, and then the BOJ give them a little nudge, and all those lot get stopped out and exited, and then they jump on the other side, and that's what happens. But as I say, at some point this is going to stop, but I don't know where. Might be here, might not be here. So the more I don't understand, I'm certainly not going to start shorting it down here. Just since last week, 161s, and here we are nearly 1,000 pips lower in a week. Now that volatility is something that really the MOF should be intervening about, because they don't like excess volatility, if you remember. But surprisingly, when they're seeing volatility going the way they want it to, they're not going to intervene in that. Just shows you the double-tongued nature of those folks over there. Its volatility only goes one way, according to them. But you can give them a little bit of rope, considering what the dollar yen's done over the last couple of years. So, if they're getting a little bit of a move down, so be it. This is looking a bit now like this, like we're getting into 2022, when we got the, we'd already had the turn of inflation, Fed in full hike mode, but the market starting to guess when that's going to come to an end. The data was coming down, CPI was coming down and whatnot. So this is looking a bit like this now, probably a bit more on a smaller scale. And maybe we see the end once the Fed cements a cut. If they tell us next week that September they're on for a cut, that'll be the market saying, finally, we've got our cut. We might get a last bit of pricing. That's probably when we probably start to see a bounce, or a decent bounce, in some of this dollar weakness, because then now the market has finally got its information, and the old buy rumor sell fact kicks in, but we won't know until next week. Yes, Gavin, pretty much so. They're full of shite, and absolutely. Right. Come on, guys and girls. I gave you a little instruction yesterday. If you want me to talk about something, then throw it up and I'll get into it. Otherwise, it's just me waffling on about nothing much else but what I'm doing. So what I am doing, I've not got an awful lot on. I've got my dollar CAD, playing that. Obviously got my euro sterling, got me dollar yen at the moment. I'm not too keen on getting into anything else at the moment. I'm also going on holiday next week, so that's one reason why I might not be getting into much at all. Go on, Brian, what do you want to ask about? I've already spoken about, well, I've already taken a quick look at cable and told you nothing's going on. I've had a look at euro sterling and told you nothing's going on. I've had a look at euro dollar and told you nothing's going on. So come on, Brian, what are you going to ask me about? Right, let's have a quick look. Otherwise, I'm going to call it a day. I know some of you guys and girls trade in dollar Swiss. So there's a lot of people pointing out that this move is a bit of a risk move. And yeah, it's a bit yes and no for me. Yes, we're seeing a bit of Swissy gaining here. But again, is that more to do with what's going on in the yen than what's going on in Swiss? If you're talking about risk on, we're not moving massively here. You'd normally see quite a big bit of buying going on in the Swissy if we move into safe havens. So this one, it's down on the 50 fib just here. Let me just come in a bit closer. So yeah, we're hitting that fib at the moment. Not that close. Let's go on to a 4 hour. So if it's going to hold up, and we've got a little bit of a level underneath as well, 85, 50s, 60s. So a little bit of a zone perhaps here, and again, this is one of these levels that's a level even before you could draw the fib on it. So when we were trading around here, it was a bit of a level. When we were here, it was a bit of a level. So it's always nice when you get a bit of confluence when you get something like a fib and it's already coming in at an area that already had some action as well. So again, if you're looking to catch a knife, then these are the sort of levels you want to do. As it's not moving as fast as something else, you're not so much at risk of getting a big flip out move. Like dollar yen, if it breaks 152, we're probably 151 in a blink. If you break 85, 87, 70s, 80s, 50s here, you're probably going to 87.30. So you've got pairs that are moving slower. And so if you don't believe the moves that are going on, you want to try and catch a knife, then you can do it nice and relatively safely, and with relatively less volatility. Another indicator, going around seeing what winds are blowing where. Yes, we've got a bit of move along the curve in yields, but if you're looking at things as purely from a risk perspective, what you would tend to see in a risk off mood, if it's a general one, is a bit of a move into bonds. Now, bonds have got a little bit of a bid, but given to the volatility we've seen over the prior months, again, we're not doing much here in yields. We did have a bit of an offish 5-year auction yesterday, which has seen yields come down, a bit similar to what we saw in twos previous to that. So we've had a bit of a move here And as you can see there, twos had a little break under this 440 level, moving lower. So we are getting a bit of a move in the curve, but it's not doesn't look a wholesale risk move. You'd expect all bonds to have a bit of a strong bid because treasuries is obviously something that people like to go to for safety. So we're seeing a bit of a move, but it's nothing excessive. Hence why I don't think the yen is a risk move either. This is a big unwind happening, and it's just spreading and spreading and spreading. Stocks as well, we'll have a quick look at that, and then I think we should call it a day. So that's had another pretty decent move lower. Talking about the 55, we had a bounce off of there. It's carved straight through there. It's carved straight through there. We had a big old level down here, 54.5. Decent lot of price action there. It's carved below there, but straight away it's resistance there as well. So we're knocking out the levels in this one as well. So that was pretty much a dead cat bounce. Couldn't get back up to the 56s, and then it's just gone meat cleaver all the way through here. But then you do hit a bigger level. It's knocked it out, but it's found resistance there. So that gives you an idea what the market wants to do here. So, you know, again, if you're trying to catch the knife, you got to be careful. You got to pick your poison, pick your levels. Where are we going from here? Who knows? We could be going all the way back down to 53s, 52s. No idea. Just let the levels do the talking. But for the moment, 54, 48, 50 is the number we got to beat to turn this around somewhat. Right, well, if there's nothing else, I'm going to get back to my trading screens because there's a lot of stuff going on. Yeah, Michael, I'll see you in the chat as well. And for those of you who are in the chat room, you can always come and say hello. Don't be shy. I know some of you like to lurk, and that's all all fine and dandy, whatever floats your boat. But you can always come and have a chat with us in the chat room. And if you're not in our chat room, why not? Get in there, boys and girls. If you like the flow show, then you can have this sort of stuff all day long with me nattering in the chat room. Anyway, that's it for today. Feels like I've worked for 2 weeks already. Have a very safe day trading. Be careful. If you're not sure, then just lighten up on your risk. Trade smaller. Protect your account. That's the main thing to do now. Kay's back tomorrow. I might let him do the news. I'm going to sit back with a cup of coffee. Anyway, have a good one all, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.